So today I'm going to share with you how to do something that most business owners find hard to get their head around. And that's how to double your profit in the next 12 weeks. Right? And if you're not making any profit at this point in time, then to capture a good share of your revenue in terms of profit and continuously keep on growing that profit as you go ahead. Right? So this is about what I call the profit multiplier, which I'll show you small changes can make big results, right? So here's the business owner's challenge. And I'm sure you guys could all resonate with this because we all have the same problem, right? There's this unceasing daily grind and endless list of to-do stuff, right? We just got a ton of things to do and just not enough time to get through those things, right? And then we end up with a Herculean daily, monthly, and yearly effort that at the end of the year, when you stop and you look back and you look at your numbers, there's actually been minimum growth and even less reward. You know, sometimes the business owner is paying everybody, but they're not even paying themselves the full, a full salary. And ultimately, you end up taking on more and more and trying to figure out how to break through your growth ceiling as such. So the way that we try and break out of these things is, we then go do another course. Like my marketing SEO is not up to scratch. Let me go do an SEO course or something, right? Or we invest in another productivity system. We chase the latest marketing trend that comes along, and we drive the team harder for sales. Or sometimes we just double down on one silver bullet. And if we're really fed up, stick your head in the sand and hope that if you ignore the overwhelm, it'll just go away at some point in time. Right? But it hardly ever does. Right? So, but above all, we usually see the remedy if we don't have enough cash and we're not making enough profit and so on, just get more business through the door. Let's go find more business. That's the main, the main solution, the one big silver bullet. But paradoxically, this really solves the problem. Because if your margins are low and you're not profitable and you're growing a bigger business, all you're doing is you're growing a bigger low margin business and you're usually adding more costs. So you end up without the cash that you need to take home, to invest in the business to make it grow even more, right? And so we always mystified about, we've got more business, but where's the cash gone? My bank account is still, is still empty. Right? So here's the thing, right? It's not about chasing the turnover. It's about the leftover that you get. That's the important thing. So it's like squeezing that lemon, right? And many business owners don't squeeze that lemon hard enough. So they're just processing more and more lemons, getting very little out to squeeze, and they think the answer is to get more lemons to squeeze. And they squeeze them just as badly, right? So you then go to ask yourself, perhaps it's time to do something different. And something that's actionable and achievable that you can follow right away. Yeah. And so the big idea here is the whole idea of leverage. Yeah. And that's recognizing that by making small changes in key areas, you can actually get massive gains in your business. Yeah. And there are only a couple of areas, if you use the 80-20 principle, that 20% of the things that you're working on make up 80% of your revenue, then here's some good news. The key areas, there are only a couple of key areas that you need to focus on, right? So more leads, more transactions, more conversions, higher prices, more profits, yeah. And by focusing on making small incremental changes in those areas, just those areas, in a systematic way can produce big results, right? And this is the piece where most business owners struggle to get their heads around this, right? So let me show you how this works. So here's what I call a profit growth calculator, right? We'll see in this calculator, it's almost like an income statement, but it's a little bit more than an income statement, right? It starts off with, at the top, leads, right? You get a certain amount of leads. So I'm going to use an example here. Here's a company with, let's say, 120 leads per year. And their conversion rate, let's say, is 15% of those leads get converted into sales, which gives them 18 sales. Yeah. The existing clients, there are, let's say, 372 existing clients. You add the 18, and for the year, there's now 390 clients, right? Let's say that they subscribe monthly to a service. So there are 12 transactions per year, and they pay on average 5,000 Rand a month for that transaction, which would generate a revenue of 23,400,000 Rand as the revenue. Now, let's say in this kind of business, the gross profits are about 40%, yeah, which gives a 9.3 million Rand bottom line, and let's say the overheads is about 9 million. So the net profit is 360,000 Rand, which would give a profit percentage and a net profit margin of 1.54%. So the profit as a percentage of the sales is 1.54%, right? So this lemon is being squeezed for 1.54% of the goodies in that lemon, right? So that's a pretty low squeeze rate as such. Now, remember what I said, there's certain areas, and they're shown in red here: more leads, more conversions, more transactions, higher prices, and then the more profits are split into more gross profits and less overheads. Okay, so let's have a look. What happens if you systematically work on each one of those levers and you improve those levers, each one by just 10%? So here we go. The leads go to 132 now, right? So that's 12 extra per year. The conversions go to 17%, right? Remember, a 10% increase doesn't go from 15 to 25. A 10% increase is 1.5%. So actually it's 16.5%, the new conversion rate, right? So quite doable. You should be able to do that with a little bit of effort, right? So that gives you 22 sales. You add that to your 372 clients, and you now sit with 394 clients. Okay. So now we look at more transactions. So how can we get our client maybe to purchase something more? And we look at cross-sell and upsell and a whole lot of, maybe additional products. Maybe if they're on a monthly sort of retainer that they're being used, maybe at the end of the year, I can offer them a review of their, of whatever it is I'm helping them with, a special strategic review of that and finding ways to improve their business. Whatever it is that you can sell, you have a look and see whether you can cross-sell, upsell, or get some additional products to buy, right? Then your pricing, right? So your price per transaction here is 5,000 Rand, right? So are there ways that you can lift your pricing? Could you do some smart bundling where you add things that don't cost you a lot, but you can, charge a little bit more? So there are a lot of strategies you can use, and I'm going to share some of those with you as well, right? But the revenue of 394 clients with 13 transactions and 5,500, 10% increase on those, the revenue now sits at 28.6 million, right? Now the gross profits here, 40%. If you can increase that by 10%, right? Not to 50, but 4%, a 10% increase is 4% extra. So to 44%. If you can improve those gross profits by Looking at your suppliers, maybe you're buying a lot from different suppliers. Can you consolidate? And ask for better prices if you give more volume to, less suppliers? Can you negotiate more rebates? Can you find a different supplier? Can you get your clients to accept something of the same quality that you're selling them, but of a lower price to you? So improve your gross profit margin by just 10%. And then if you can look at decreasing your overheads, many business owners don't look at that very closely. Are you paying too many bank charges? Do you need all those cell phone contracts? Does your driver have to go all of those routes? Can you save just 10% additional costs? And look what happens to your net profit in this example. That 360,000 goes to 4.47 million rand. So significant, right? So lifting the profit to 15.67%. Now, what I want to show you, and this is quite important, right, is that if you look at each individual changes, there were 6 areas that we changed by 10%. So that's 60% of change that's been made. But you're getting a 1,140% increase in profitability. How does that happen? Well, the reason for that is the leverage. It's the compounding effect. Just like you put 1,000 Rand into a bank account, and this month you earn some interest on it, the following month you earn interest on your money plus the 1,000 Rand, plus the 1,000 Rand that you put in, plus the interest you earned. And the following month you earn on the 1,000 Rand plus the interest last month, plus the interest the month before. And so it compounds. This is a very similar effect, right? So by focusing on one area alone, that's where most business owners make the mistake, right? So if I want to get that same profit at the bottom line by just changing the number of leads I'm chasing to get more business, you need an astronomical amount of new leads to give you that, right? And it's very difficult to do that. It's a lot easier to work on a number of things and make small changes in your business, which can give you big results, right? So you've got to realize that not all levers are equal either. Yeah. So if your conversion rate was sitting at 90%, it would be difficult to get it much higher, right? But for many business owners, a lot of these levers are actually quite low, right? There's a lot of room for improvement, and hence a lot of room to make some gains very, very quickly. So you can't work on one thing. You can't even work on 2 things, right? You've got to work on all these things, all these levers systematically, and lift them to get the compounding effect. That's the secret to profitable growth. Right? So by transforming the way that we look at business, we can achieve, the dreams that we've been thinking about with far less risk. It really is doable. Now, in my last training, let me cover this as well. The golden key to success here is it doesn't matter how good you are at what you do in your business. To grow a successful business, it's all about how profitably you are managing to do that, right? That's the key. So with a system like this, what happens? You make life easy. You start to eliminate some of the stress and pressure because you have more money coming into your bank account. You start getting things off your plate. You start to focus on the things that truly matter, not the next shiny silver object that somebody says, wow, you need to do, right? You start getting paid for what you're worth. And the one that really excites me the most, I'm going to give you an example in a minute, is you can make the impossible possible. And the example I'd like to show you, which in my previous training, I promised the one, the Leonardo formula, how to create a vision. I spoke about how Larry, the headmaster, made the impossible possible. He had a school and, you know, a Model C school, and he had this dream of building it into a sport, a good, strong sporting ethos, have an AstroTurf, have a couple of other things. He had big dreams for this, but he could never make it work. Okay. So let's start with his current reality, right? He didn't have enough cash. The school never has enough cash. No strong donor base like some other schools. There was a strong demand for hockey, right? But no AstroTurf. And they want to play in the higher leagues, but they're constrained due to poor facilities. You can't train on grass and then go and win on Astro, right? And they were losing good students to other schools due to better facilities. So his vision was build this AstroTurf hockey field, right? He had a much bigger vision, but that was his first vision. Competition against other schools, a league or two, you know, get up there and become a strong contender in hockey playing schools. And he needed a plan, the steps to get there. And so how did he get there? Well, I used his money model to unlock what is possible. And let me show you his money model. Right. So here it is. Okay. So in his school, we sat down and said, how does the school generate income, right? So you have a certain number of classes, right? In this case, 30 classes. So 5 grades, 6 classes per grade, that's 30 classes, right? They average 26 students per class, right? The fee per year per student was about 20,000, was a bit less. I'm just running it off here for example's sake. So the income about 15.6 million per year. The fixed cost about 15.3. So the net income or the surplus, right? They're not a profit-making institution. So the surplus is about 300,000, which then gets used for projects and so on, right? So we said, okay, so what if we start to look at things a little bit differently, right? Building classes is expensive. So let's just leave the number of classes the same. But what if you lift the average students per class to 29? Okay. And what if we go to the parents and instead of the 6% increase we'd ask them for 2% extra, 8%, and explain what it is that we're trying to do, the AstroTurf and the benefits it will have, you know, to the school. That would give an income of 18.79 million. The fixed costs increase by, you know, 6%. So the net surplus now becomes 2.27 million, right? And that was a jaw-dropping insight. Okay. Now, not every class was at 26, some were more, some were less. So the numbers weren't exact. This was a little bit less than that, but you can see the impact that this has, right? So based on that, we could put a good strategy together, right? So increase the average class size is 29, raise the fees by additional 2%. Don't build any new classes because that's additional infrastructure and staff costs that you need. Then generate sufficient cash to cover a loan repayment. So we could figure out the AstroTurf costs about 6 or 7 million. If you take it over 3 years, okay, what would the repayment be and would this number cover it, right? Repay the loan in less than 3 years, which was one of the criteria because for a school like that, the governing body that makes the decisions is only around for 3 years. So you don't want to lump the next governing body with, you know, a dud idea, right? So that made the impossible become possible. And let me tell you what happened after that. Once you know this formula and you start using it, okay, you can start making more things impossible. They used the same formula, right? Not packing more classes, but started looking, well, what if you put 5 extra classes in? And that kind of thing, right? They went on to build a fully equipped gymnasium, right? They then went on to build a heated indoor swimming pool, half-size Olympic swimming pool, heated indoor, fully covered. Right? They're now looking at building an auditorium with a AI robotics lab underneath. Okay? Once you know the formula and you start using it, you can make the impossible become possible. So here's my challenge to you guys. Unless you're making huge profit margins at the moment, I bet you can double your profits in 12 weeks. Okay? 12 weeks, right? And if you've downloaded the worksheets that I sent you a worksheet like this. Okay? And I'm going to talk you through that worksheet and give you an example of how to use it so that you can generate your own plan and work on those 6 levers, changing 1 lever every 2 weeks. Just 1 lever every 2 weeks is all you need to do, right? So yeah, I've pre-populated this, but I've given you a blank one as well in case your model looks slightly different. Sometimes there are nuances with different businesses, right? But the idea is take your last 12 months worth of numbers, and I'll work through an example to show you how to do that, right? Look at what your net profit is. And then at the top right-hand side here, then capture that and what your net profit percentage is of revenue, okay? Then double that percentage, okay? Unless you're high, if you're like 15 or whatever, it's going to be a lot harder, but most smaller businesses are much lower. And then set yourself a target for the net profit before tax, okay? Then the next step is you start looking at ideas to lift the levers, right? And you start to assess what kind of number can you try to move, right? What can you try to gain? What's that gain? And then work out the next profit, the net profit. Look at your top 5 opportunities. So it should be 1 opportunity for each lever, right? And then decide on what is your low-hanging fruit for the next 90 days. It could be 3 things, it could be all 5 things. So 90 days is 12 weeks. And put a plan together. Every 2 weeks, move 1 lever, right? Okay, so that process, those 7 steps is what I showed you there. Lay out your money model, brainstorm some ideas, assess the impact of those improvements individually, pick the low-hanging fruit to implement and turn those into 12-week action plans, measure and track your results, and then adjust and improve, and then rinse and repeat. The following 12 weeks, do it again, and do it again, and do it again, right? And guess what happens? Your growth starts to grow exponentially, right? I have one client who went through this process when we started, was on 5 million turnover. This year, ending February, he's probably going to hit 40 million turnover. And how did he do that? He looked at those levers. He started thinking really smartly about it. What kind of clients he needs that can give him more average value, etc. Targeted those, and it's just exploded, even through COVID, right? So let's give you an example. Let's say you're a construction company, right? And you've got to populate this, you've got to populate this, this template. Where do you start, right? So you look at your last 12 months of numbers, and the first thing I would put down is the revenue, right? So what was your income? Because you should know that, right? You can get that from your accounting statements, right? Then I'd go down this way, because all of these numbers you should have available. What were the cost of goods sold? What was your gross profit? What was your OPEX? What was your operating income, right, for a construction company? And then what was the net profit before tax as a percentage of revenue, right? So make sure this doesn't have depreciation and all those accounting things in it. So work on a good cash basis, right? Then I work upwards. From there, the second step, because usually business owners don't have a lot of this information. So if this was a construction company, they'd ask, so how many projects did you do during the year? Well, I did 5. Okay, and I got 10 million. So the average income per project was that, 2 million, right? Then I'd say, okay, those 5 clients, where did they come from, right? How many people did I meet with to talk about maybe giving them a proposal, etc., that ended up with 5? Well, maybe I spoke with 10. And this is where most business owners don't keep the figures, right? So I want to urge you, keep stats of everything, right? Try and keep especially these levers and the breakdown of these levers. So those 10 leads, 5 might have come from architects and 5 might have come from somewhere else, right? But figure out, keep those stats so you can figure out where your biggest opportunities for improvement are. Okay, so if I spoke with 10 people or put out 10 proposals and I got 5, that means my conversion rate's about 50%. Okay, so now I have a baseline to work from. Okay, so the next step now is, okay, let's have a look at the number of leads. What ideas are there that I can get some lift from? Aiming for 10, but if I can't do 10, then what can I do, right? So, well, maybe I can look for referral partners. Maybe I can go and speak to 2 or 3 architects that can direct business to me, right? Maybe I can improve our search engine optimization. Maybe I can do open days, maybe networking, right? So look at the ideas, and I'm going to give you a whole list of ideas of things that you need to do. And they don't need to be big, long things, right? Some of these things can be real quick wins. So start off by looking at the low-hanging fruit, the quick wins, right? Then my conversion rate, how can I get this up? Well, I can improve my unique selling proposition, what I say to my clients, why they should buy from me. I can upgrade my sales skills so that when I meet with a client, I have a better sales process, right? I can look at financing options. Maybe that can improve the conversion rate. Maybe I can make my offers more compelling. Maybe I can look at guarantees and risk reversal, and then pick one of those and estimate what it could do for you, right? So maybe 10% extra. Okay. Then around the income per client, maybe I just raise my price. Okay. Many people are scared to do that, but for another day, I'll show you why you shouldn't be and how to look at this before you do make an increase. Target better prospects. Okay, that's what my Wi-Fi client did to grow his business from 5 million to 40 million. Right? Maybe you can educate them on the perceived value so that you can charge more. Maybe upsell and cross-sell, or additional products and services. Right? What can I get there? Well, I can't get 10%. Maybe I can get 3% there. Right. Okay. So what's the next thing, right? The cost of goods sold. Right? Well, let's have a look. What can I do there? Maybe I can look at a rebate program with suppliers. Maybe if I consolidate with them, I can get more rebates, or I can get better pricing, or maybe I can find better suppliers. Let's have a look at the cost of goods sold. Maybe I can get my clients, if I'm manufacturing something for them, to agree to something that's cheaper, right? Generic medicine rather than the original medicine, but it works just as well. So look at how you can reduce your cost of goods sold, and then your operating expenses. In this case, if this business becomes more efficient and does projects in a week shorter, and you do 5 or 6 projects, that's 5 weeks extra. Maybe I can put another project in. So better project planning system. And in this case, I can get 2% gain there, I think, somewhere around there. But unfortunately, I need to spend 2% more on marketing, so it's a 0% gain there, right? But the total improvement here is now 313%. Okay, so I made a massive improvement here. So what do I do next then? I go to the ideas, the best ideas, the low-hanging fruit, and I put them down as my top 5 opportunities, right? And then I create a 90-day plan. What am I going to do in the next 12 weeks, which is 6 projects of 2 weeks each. Yeah. So either try and do all of those projects or try and do at least 3, right? But try and do all of them. Every 2 weeks, do one, and you can get your, you can start getting your profitability up. Now, you might say, yeah, but my business, I don't have any ideas, blah, 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 blah. So I've added a whole long list of things that you can think about, right? And remember, try and go for the low-hanging fruit, the things that are easy to do. Not everything applies to every business, but there's a ton of things that you can think about, right? So ideas to get more leads, all right? Ideas to lift your conversion rate. Ideas to lift the number of transactions and earn more revenue per client, ideas to raise your price, ideas to raise your profits, right? Yeah. So guys, another reason why you should do this. I often say to people, guys, why don't you come along, double your turnover, but triple your profitability and 10 times your valuation of your business valuation. And then they look at me, it's hard for them to get their heads around it. I think it's just sales talk, right? But think about this. Here's this business on the left that I used in the beginning example with a 360,000 Rand profit. Okay. After a 10% increase to all of those levers, that same business now does 4.478, right? As an example. Now, what's important for you is this. If you want to sell this business one day, it will probably go as an unlisted business for maybe a price earnings between 3 and 5. If you've got a really good business that's highly systemized, etc., very much in demand, you might sell it for 10, a price earnings ratio of 10, which means the price people are willing to pay are 3 times the earnings. In other words, I'm going to get my money back after 3 years or 5 years if it's a really good business, 10 years. The business valuation is usually a multiple of this. And guys, this is a very rough, crude, earnings-based valuation, right? So the right way to do this, if you do sell your business, is you go to a qualified chartered accountant and you ask them to do a proper valuation, right? But at a multiple of 3, this business is worth about R1 million. But after making improvements systematically over and over again, that same business is worth 22 million Rand, right? And imagine what it's going to be like if you do a 10% increase, a 20% increase. So if you want to increase the value and valuation of your business, work on these things, implement them in your business, systemize it. In other words, create processes and operating procedures for the things you've implemented. So it becomes part of the business if you sell it. Right? And that way you will also increase your business valuation. Okay, so there's a nice saying here. You don't have to be a genius or a visionary or even a college graduate to be successful. You just need a framework and a dream. That's what Michael Dell said, right? You need that dream, the thing I spoke about in the last training session. And you need a framework to help you get there, your money model, your profit levers. Right? That's what's going to help you to get there. Okay, so, guys, before we go into, question and answer time, if you'd like to double or triple your profits in just 12 weeks, feel free to reach out to me. Or if you're not, making any profit at the moment at all and would like to capture, a good slice of your turnover as profit, just send me a message or go to my website and, book a call. There's a tab there where you can book a call. Hop onto my website, book a call with me, and we can talk about how you can improve your profitability, get you through the growth ceiling, or if you're already on a roll and through the ceiling, grow more profitably and faster. Okay, so guys, let's open this up to questions, and I'll try and take your answers as well. Your thoughts on this and any questions. So Dave, I always put you on the hot spot. Shall we start with you again?
You always put me on the hot spot. Yeah, right. Yeah, no, I think it's very valid. I was just trying to apply my mind to all the. I'm in the sort of a drinks business or a little business we started, and we're really plodding along, and that's why I find it very interesting to hear what you have to say and how do we upscale. And you make reference to leads, so you have to then say our leads are technically customers or resellers we can get out, and that's what I'm busy trying to work on at the moment. So very valid, but also the other levers, as you say, which I found quite interesting on that first table you were talking about. We need to look at the other levers involved, like when we do labels or when you do bottles. Because you're a small operation, you don't always get the scale or the benefits of scale. So that's what I need to apply my mind to, because we can, when you do label runs, they want you to do 20,000 to give you a thing, but sometimes when you're short of cash, you don't have that big amount just to hand out. So it does impact on your cost of sales.
Yeah.
But I'm keen to hear what these other experts have and the challenges they're also facing.
Yeah, so, Dave, this model applies to any business, right? And every business. You might have to just capture your, adjust that equation to reflect your model a little bit more. And there's some nuances around that. But the idea...
maybe I can touch base with you privately just to share some thoughts there, and then we can look.
Yeah, not a problem at all. Happy to do that, right? Just drop me a mail, and I'm happy.
I'll do that.
Yeah. Okay. All right. So, Amsi, your thoughts?
I think that when you went through the process, is to at the end of the day, like with a school guy, if he could have built all those nice stuff from the start, then obviously he would have automatic growth. But he started the other way around, and he used what he had in small portions and grew that to be able to get to the AstroTurf and to get to all the nice stuff. So I think sometimes it's not building on the big things, but the small stuff that can make a change, that will then give you a lot more momentum when you've got the cash to do the big stuff, like building a bottle plant or getting all of that scale right to make a lot of profit. So I think it's to be able to have the energy and the vision to start with the small stuff and then work towards the big stuff.
Yes, absolutely. That's great insight, that Amsi. We always want to have the big silver bullet that's going to solve all the problems, but we don't have the money for that, right? But there are a lot of things that we can do pretty inexpensively if we're just willing to think more creatively and out of the box, right? And just by making those changes, but not in one area, in all those areas systematically, and lifting the profits, that then opens up the opportunities to do other things, which was previously unaffordable, right? And it's amazing what cash flow can actually, what problems it can solve when you have the cash, right? So it's like a rolling stone that gathers moss. It starts to build up that momentum. And so that's really the key as well, is to the rinse and repeat that I spoke about. You just get it going, right? And in the following 90 days, do the next set of things that you can do, right? Look for the next low-hanging fruit. You have a bit more cash, do the next things, but don't stop doing it. That's the thing. Make it part of your way of building your business, your DNA, your method of building your business up. If you do that, you've got a systematic process, and stick to that process. It's gonna give you results. In fact, if you work this process, you cannot not make money. Let me put it to you that way. Because it's not impossible to do. There are 1,000 ideas that you can bring to make small changes that are going to give you benefits. Yeah. Awesome. Thanks. Thanks, Amsi. Makalani, your thoughts?
Yes. Thanks, Peter. I think, I'm actually thinking deeply about this now. It's amazing how these small changes lead to such a big impact. And, one sit back in a dark corner and think that things are not going well. But it's amazing because, it's what I take is it's really about starting from where you are. And small changes really, it's amazing. I'm actually happy I attended today.
That's great. I'm glad you got a lot of value out of that. And while we on that as well, the other thing I must caution about is don't get into analysis paralysis. Right? Sometimes you can start going so deeply into these things. Okay, but I've got 7 different products and each one has a different margin and so on, right? And you then go into analysis paralysis and nothing happens. Just stay at the upper level and find ways of improving. It's about the action rather than the analysis. Right? So rather try to get action quicker, test it, get into the market, make the improvement, see if it works, move on to the next one, right? Move on to the next one, onto the next one. Because, I have some clients that have that tendency, right? Some of them have come out of like a corporate world and they've done modeling and so on. And they end up with this massive spreadsheet with so much detail that they get lost in what they're actually trying to do. So don't get lost with that. Just remember, it's about the impact on your business that's sort of important. Sorry, Makalani, you had your hand up again.
Yes, Peter, thanks. I think you're speaking to me there. Remember, I'm a finance person, so I look at the numbers and I start to analyze. I take that. Thanks for that. I have to look at it.
Right. Doug, your thoughts, any insights? Or
yeah, Peter, it's actually come at quite a good time. We had a monthly finance meeting yesterday on the 5 companies. And our new financial year is next month, and we've got all these action plans, which I did touch on last week. But one of the things that comes out of this, we're in the retail game, so people are coming across your counters. But it's those stats that you talk about right in the beginning. When you ask the people how many leads or how many people, whatever, they can only tell you the people that actually purchase something.
Yeah.
Nobody can come and say, yeah, but there were 4 others that asked about this or checked a price, or they don't look at those as potential leads. Do you know what I'm trying to say?
Yeah,
so it's putting something in place which doesn't seem a pain in the butt to them is to get that information, because by getting that, you can balance it against your actual number of sales against the value. Otherwise, it might give you a bit of a distorted actual sale value when you might have had another 10 people that didn't buy anything.
Yeah.
So to work out those conversions is to get the guys on the ground to actually keep that information. So that is a thing that I really think is to try and sell across to the people on the front line. They just see it as a pain. You know what I mean?
Yeah, that's so crucially important, because if you don't have the data, you don't really know what to improve.
Exactly.
So, if those people at the counter, I don't know if they counter salespeople, but let's just say they are, if their conversion rate is running at 30%, right, and they're selling 100 of these things a month, or whatever it is, that means that there were actually 300 people that walked in.
Yeah.
So if you can improve, if you know it's at 30%, and you say, okay, can we get that to 33? Let's look at who's the best person that converts here. What are they doing? What are they saying? Can we then try and bottle that and teach the others to do the same?
Yeah.
Right. You get 3% across the across the board, there you are, right? So now if you now drive in more traffic, instead of 300, you get 400 in at 33% rather than 30, you're starting to make a big difference.
But Peter, even the 300, if you can get them to spend another 3%.
Yes, as well. Absolutely. All those levers, right? So
those,
you know,
they all add up together if you know what you're doing. Instead of, you know, there's that famous joke where the guys all sit behind the counter and they say, let's pray for a miracle. Yeah, it's just those little bits which you've touched on twice today.
Yeah.
Those little bits make massive gains at the end of the day.
Absolutely. And just training your staff. So for example, when I go on a Saturday, maybe pop into our local spa to buy some ribs or whatever for a quick braai, right? I end up at the counter. Max, the owner, very friendly guy, is there. Max is there, and he's ringing up everything on the till. He says to me, "Hey Peter, have you got the blitz and the firelighters?"
100%.
Geez, I don't remember. He says, "Don't worry, stay here. I'll go fetch it for you quickly."
Yeah.
Okay, there's his 10%.
Exactly.
If he's training all his people at the tools to ask questions like that, there's his extra 10%.
Well, it's the philosophy of McDonald's, isn't it? They always try and sell you one more item. No matter what you order in a McDonald's, there's always one more thing, and that's their model.
Exactly.
But I think similarly in restaurants, gents, you know, the side servings and that are always a bit extra. And then, or if you're somewhere, the guy will say, "Oh, do you want avocado? Or do you want this? Or do you want that?" So that's where certain restaurateurs train their staff quite well to.
Yes.
Because if everybody, it's similarly if you're going to a motor dealership, and I used to be in the finance game in dealerships as well. And your car goes in for a service. How often do you get a call to say, "I think do you need your windscreen wipers changed?"
Yes. Yes.
And one day I said to the service guy, "But you changed it in March this past year," type thing. And if their service advisors just get an extra 5 customers a day or 10 customers overall in the whole service department to take windscreen wipers, and they're charging you 500 Rand a set. I mean, that's 3 grand extra into their turnover.
100%.
They're doing that 5 days a week, and without any change in behavior, just a better behavior of the service advisor. So, but the challenge I face, you know, and I like Doug's idea there. You know, we are sort of a new business trying to get brand awareness. And that's the challenge we face, because you don't always have the cash to go and spend to do all these things to get the brand awareness. So that's why I was interested in the levers and the things like that, and how you go about getting more brand awareness without paying huge amounts of money out for that. That's the challenge we face.
Yeah. So Dave, you don't have the cash for the brand awareness, but use the levers to start generating more and more cash. And that's going to open up more marketing opportunities, etc., for you.
Yeah.
But get the flywheel moving, right? That's the important thing. Get it going so that it can generate what it needs over time.